To accurately identify potential stocks and determine your entry and exit points, you'll rely on swing trading indicators. These are what signal opportunities to you. And as you have probably begun to realize, there are a lot of different indicators. Do they all have their place? Yes. Do you need to rely on all of them? Absolutely not. In fact, using too many different swing trading indicators can lead to overcomplicating and overthinking. Why not simplify your trades by just focusing on the best indicators for swing trading? Today, we'll help you discover the top indicators and explain how to use them to your advantage. Then, we'll let you in on a little trading secret that will transform the way you look at indicators forever. What are swing trading indicators? If you're familiar with how swing trading works, then you know that traders look for trends and patterns to identify opportunities. The goal is to get a position in a stock that has pulled back in price from a longer-term uptrend, and the longer-term trend reasserts itself, and get out before it trends back down. But how do you find these opportunities and validate them? That's right, using indicators. Swing traders use indicators to help them make informed decisions. But what exactly is a swing trading indicator? This is a mathematical model that helps you understand trends and data. You can use a swing trading indicator to predict various aspects of a stock's price. Will it go up, down, or remain stagnant? What is the potential for this stock, both in terms of gains and losses? With the best swing trading indicators, you can make accurate predictions about what a stock will do. You'll be able to tell if a trend is bullish or bearish and what the momentum behind that trend is. This helps you identify which stocks you want to trade, while also helping you identify the proper entry and exit point. You could lay these indicators across a stock's chart. They work on daily charts, weekly